Welcome back to the channel and Happy New Year to everybody. I'm filming this for New Year's Day 2025, and I always think it's a good idea if you are into collecting, whether you're collecting for investment or whether you're collecting for the passion or maybe a little bit of both. I think it's a good idea to have a state of the market and what the outlook looks like for 2025. And maybe some tips that you can use going into 2025. I feel like this year, more so than just about any other year since I've started this channel, I feel like this year is an inflection point for vintage Star Wars collectibles. There's a lot going on this year. We have the Jeff Jacobs collection going up on Hakes throughout the course of the year. The best of the best, the highest of the highest grade, the rarest of the rare. And I think that everything else will kind of feed off of that to a certain extent. We've had some really amazing items that have sold over this past year, not only on eBay, but on Heritage, on Golden Auctions, and of course on Hakes. And I just feel like this is the year where we're going to know a lot more about where the Star Wars market is. Obviously, the brand as a whole is struggling right now. I think we can all agree on that, whether you like the new content on Disney Plus or not. To me, it feels like the Star Wars brand is really struggling. New shows are like Skeleton Crew's come out. I haven't even looked at it. I mean, it's just it's kind of gotten to the point now where I'm expecting the worst of the worst, and I've just forgotten about it. I've just moved on. I've got other things to do. So I hate to say that, but it's true. And beyond my stupid face on this thumbnail, I just have some ideas for tips, pitfalls to avoid, and maybe some price predictions as we talk about not only the Jeff Jacobs collection, but just collectibles as a whole from the Star Wars brand. I'm going to be coughing throughout this video. I've got a throat lozenge going on. I've got a really dry, scratchy throat, so it makes it very difficult to talk for prolonged periods. And I think with any collectibles finance or with any collectibles kind of market, it's really tough to narrow in on the Star Wars collectibles market without talking about the general economy as a whole. And I don't want to make this an economic video because you guys don't seem to care about that stuff, but I can't really talk about predictions for 2025 without talking about what I think is going to happen on a macroeconomic level for 2025 for the U.S., not only the U.S., but maybe the world. But I'm mainly focused on the U.S. Just because that's where I live. And again, I'm going to try and be brief on this stuff, but bear with me as I kind of just give you an idea of where I think the overall U.S. economy is going this year. Because a lot of what happens is the trickle-down theory, right? If your stocks are booming, if your house is going up in value, if your Bitcoin or cryptocurrency holdings are going up in value, we've seen that it does affect the prices for Star Wars collectibles, high-grade Star Wars collectibles. And that's mainly what my channel is focused on, right? And it's not always the case, right? I mean, we had COVID where I think it was a unique circumstance where the stock market was cratering. Everyone was getting laid off, but people had all this excess income while they were in lockdown. And so the Star Wars collectibles market, just like every other collectibles market, really shot up during COVID. And so that's really the only exception. I consider that kind of a one-time event as it relates to what happened back in 2020 and 2021. But I think you need to look at where the market is going, and let's just talk briefly. Okay, I'll try to be brief, but it's important to think about that as we tie it back in and narrow down towards the end of the channel into collectibles. And I'll say this, that I personally think that and I'm going to try and keep this as apolitical as possible. And I encourage you, if you're going to comment, let's not get political. Okay, we've gone through the election. I don't care who you voted for. You don't care who I voted for. And I'm trying to talk about facts. Okay. This is all about facts. And so Wolf Street is a website that if you don't follow Wolf Street, you really should. It's a great website to subscribe to. It's free. And he really covers pretty much everything as it relates to the economy. And what we're really noticing is that despite the Fed dropping rates. By the time this video comes out, the Fed will have probably dropped for a fourth time, or I guess a third time, but 4 overall rate cuts. We did a half point cut, another quarter point cut, and this will be another quarter point cut. So a total of about a point they've dropped off. But what you'll notice is that the 10-year yield on treasuries is going up despite that. And what that is really saying is that the market thinks that we're in for some big time inflation to kind of rear its ugly head. We've already seen that in the data for the last couple of months, October and November data, whether it's producer price index, the wholesalers index, the CPI, consumer price index, all of that stuff is showing that inflation is going the wrong way. And why the Fed is cutting, I have no idea, because the economy is really strong right now. And by cutting the Fed's rate, the short-term rate, all it does is overheat the economy even more because it makes the cost of capital cheaper for everybody. And so what you'll see is that despite the Fed cutting rates, everything is starting to creep up again in terms of yields for longer term. And what that really means is that the market is expecting inflation to rear its ugly head again next year. And I think that's going to be the case for a number of reasons. But the easiest thing to look at is the 30-year fixed rate mortgages. Since the Fed started cutting rates, which is in this red square here, it's done nothing but go up. You would think with the Fed cutting rates that mortgage rates would drop. It's done the exact opposite. It's gone up quite a bit. And what that really means is that, the market just doesn't buy the fact that inflation has been beaten, and the data proves that. And combined with that, we have Trump's kind of plan to add tariffs on either Canada or Mexico or China or whoever, okay? And that does tend to be inflationary. Those costs do tend to oftentimes get passed on to customers. Sometimes it can work. He had some in his first term that Biden kept in place with China. But talking about doing it with with Canada and Mexico, it really could lead to even more inflation that we're already projecting for early next year. So I personally think that all of these kind of factors are combining to rear its ugly head with inflation, and we're going to see inflation kind of go back up, and probably by about mid-year, the Fed's going to realize what a mistake it was to cut rates, and they're going to start raising rates again. And that's really going to slow things down. So I think we're going to be in for some boom times for the economy starting in January. By the time this video airs, it's January 1st. I expect the economy to be really good in the U.S. for the next, let's call it 4 to 6 months before the Fed starts to clamp down again on the rates, start hiking rates to get inflation back under control. That in turn is going to trickle down to the economy as a whole, and we're going to start to see a slowdown, whether it's the stock market or anything else. And if you don't follow Tom Lee, he is a market strategist. If you don't follow him, you need to. He's a very, very good analyst that knows the economy really well. He's projecting basically what I just said. And I actually had these thoughts before he even came out with his data. So it was nice to see that Tom Lee, who is way smarter than I'll ever be, he basically has foreseen the same thing. He thinks we're going to be on track for another consecutive year of 20% and of 20% gains, with a pause or a slowdown towards the middle of the year, and still ending fairly high. But he's expecting the S&P to advance to around 7,000 by the summer, but in the year at 6,600. So he sees a pullback in the second half of the year. And that's exactly what I think is going to happen. Coincidentally, he projects Bitcoin to go from, it's roughly about 106, 108,000 per coin right now. He's expecting it to be 250 by the end of the year. So a big run up in Bitcoin. Trump has already hinted a lot of plans for crypto. The only reason I bring up crypto is that during times when Bitcoin has been really up in value, I feel like that corresponds to up prices for collectibles. That's not always the case, as we'll get to when we start talking about some of the recent heritage sales. But I do think that there is the idea of I feel richer because of my stock investments, because of my house going up in value, because if I got Bitcoin or whatever it is you own. And Trump has a pretty audacious plan for Bitcoin and to make it part of the national reserve. There's other countries doing the same thing. There's a lot of headwinds as it relates to cryptocurrency that I think could trickle down into other markets. And while this chart applies specifically to Bitcoin, I think you can apply this chart to pretty much everything finance related. It's called the Fear and Greed Index, and it basically tracks where they think the market is right now for Bitcoin. And right now it's at extreme greed. That's the green over here. They're saying it's an 83 out of 100. They have a bunch of different metrics that go into how they measure this. And not terribly surprising given that we have all new highs. But I think that this kind of chart, you can really apply this to everything related to the stock market and everything else. So that's what we have going into the year. We're at all-time highs for all of these different asset classes. And will it track the same way for collectibles? Well, one of the big things I wanted to talk about was the Morphe auction, right? This was back, I think it was in 2022, somewhere in there. It was either February 20, I think it was February 2023. Yeah, so here it was. The Morphe Fine auction was on February 1st, 2023. And we saw the prices of those items. Those items were not graded, right? They were just like a loft find, attic find of items that were still in the original shipper cases, and they commanded really significant price premiums relative to what we consider to be fair market value. I think we can all agree that. Not everything was, obviously, but a lot of those items went for significantly above fair market value. And the reason I bring up Morphe is because I think we're going to see a similar case with the Jeff Jacobs collection. It's going to set new highs. There's a lot of excitement from the collecting community, especially the high-end collecting community, the big whales that are out there, the types of people that have lots of stocks, lots of cryptocurrency, lots of houses. All of those assets are really up in value. They feel even more rich than they already really are. And I think you're going to see a lot of big bidding on the Jeff Jacobs collection. We're going to see lots of all-time highs for a lot of these items. Heck, the AFA 90 single score, by the way, not three-tier grading. The AFA 90 32-back B Yoda just closed in the last Hake session for, what was it, 16,000? I mean, that is a massive, massive number. And given that an 85 sets you back, what, $1,500, $1,600? We're talking 10 times that number for an AFA 90. So those types of prices that we saw, like for that 32B Yoda that we saw that was AFA 90 in the last Hake's auction, those types of prices have the potential to be across the board for a lot of these items in the Jeff Jacobs collection. And I think for the average collector, the whale collectors, for the most part, don't watch my channel. Okay. I know of a few of them, but the vast majority of you are like me, right? We have a budget. We don't have unlimited funds, and we have to have a game plan in place as it relates not only to the upcoming auctions at these big auction houses like Heritage and Hakes and Golden and all that, but just how we're going to fill out our collection next year. And I think that you'll be surprised by my plan for this year, which we'll get to in a second. But I wanted to at least mention the Morphe auction because a lot of people overpaid in that. A lot of people reached out to me after buying in the Morphe auction. They're like, yeah, I really overpaid on that. Once you factor in all the fees and everything, I lost money on it when I tried to resell it or after I got it graded, things like that. So you want to try to avoid these pitfalls, right? Overpaying. I know I'm guilty of it. I know pretty much every one of you watching my channel at some point or another has overpaid for an item. And I try to avoid it as much as I can now. Does that still happen? Absolutely. Absolutely. There's several items that I overpaid for this year because I thought it would be the last time I'd ever see it pop up. It comes up, I pay whatever they're asking for it, and then lo and behold, a month or two or a week or a day later, another one comes up that's exactly the same and sells for 20% less than what I paid for it. Lesson learned, right? Most of this stuff is not rare. Maybe in the grades that we see next year, they're rare because we do have the population report now from AFA. If it's a one of one, it's a one of one in terms of the population report. So you got to be prepared to overpay for it if you're going to win it against some of these deep-pocketed bidders that we're going to see in a lot of these auctions. And another word of caution, kind of like the Morphe fine, we have this, I'm just showing two examples from last year over at Heritage, where we had on May 31st, we had a prototype rocket firing Boba Fett L slot hand painted AFA 60 that sold in May for $525,000 after the buyer's premium. Well, then we have an AFA 80 L slot rocket firing Boba Fett that sold December 4th, less than a month ago, for $275,000. Now, it's not exactly the same. I get all that, but these are both hand painted. They're both L slots. One of them was graded 80 and sold for a lot less than the AFA 60. Again, I'm sure there's some slight variations and things like that, but they're largely pretty close the same. To have that big of a difference in price, especially given the difference in grade, that has to be awfully disheartening for the person that bought that AFA 60. You want to be the AFA 80 guy, not the AFA 60 guy, right? And going into this year, it's just something to keep in the back of your mind. I'm not saying on the Rocket Firing Fest, but whatever it is you're buying, okay? It could be as simple as an AFA 85 Biker Scout, loose graded, right? $150, $200 item, whatever the thing is. Don't pay $200 if you can get one for $150 or $175, right? So it's a lesson learned for us, and we didn't have to make this multi-$100,000 mistake, right? That whoever bid on that 60 grade made. And so, obviously, again, we got the Jeff Jacobs collection starting in January 6th. So as of the airing of this video, in 6 days, the bidding is going to start on what is an incredible lot of Star Wars, G.I. Joe, Transformers, you name it. I mean, he's got all kinds of great stuff that's going to be listed. And if you're planning on bidding on that, you just got to have a game plan in place. And I know that a lot of this stuff is stupid PowerPoint type stuff, but it really helps, I think, to dumb it down. Really dumb it down before all of the mayhem starts this year, not only at Hakes, but, again, just broadly speaking, as it relates to your collection. What is your mission going into the year for your collection? I had a mission going into 2024 that I wanted to add a bunch of Tri-Logos. I had a number of Tri-Logos that were on my want list. The Death Star droid, the Tusken Raider, and a few others. And I managed to get most of them. The IG-88 was the only one I didn't get. And one did pop up, or two did pop up, and I had my top number in mind. I bid my top number, and I did not win on either one of them. I finished second on both of them. And you know what? I'm okay with that because I stuck to my plans and my objectives and how much I was willing to pay for them. And I would say that for the most part, if you look at the mint on cards that I added in 2024, I added 28. That's a massive number for me, for someone of my collecting rep, right? I'm not like a big whale, and I usually add 10 to 12 mint on cards a year. This year I added 28, or this past year I added 28. That's a huge number for me. But the ones I was able to add, I feel like I actually got them for very fair prices. The AFA 80 Yak Face Tri-Logo, obviously the Death Star droid, the Red Bar R5D4 mint on card. A lot of those I really got at what I consider to be very fair prices, to where if I had to sell them tomorrow, I would be in the green. I would be able to make money on those purchases. And they were not all big friend deals, right? Not all of them came from my buddy Chris over at Rogue 5 Toys. Some of them were eBay. Some of them were at auction houses like Certified Link. Some of them were at Hakes. And, there were some that I did overpay on. But I would say that if you look at, just looking at the prices I paid versus where I think they're probably worth today, even today, I think that about 80%, I would say safely 80% of them I could sell today and either break even or make money on. And, I've held them for less than a year, some of them less than a month. So having that ability to be really disciplined in what I'm willing to pay for something and walk away if it gets too high for me. It's not easy to do. I know that, especially if it's something that you gotta have. But I really think that if you have your mission in place beforehand and you have that vision as to what you want to add this year and how much you're willing to pay for that particular item in that particular grade, the goals and objectives, all of this ties together to where I think you'll be successful at the end of the year. But you definitely need to write down, like actually physically write down or put a spreadsheet together or whatever as to what you want to add to your collection, and try not to get off track. That's usually another big thing for me. One thing to think about is concentration versus diversification. All right. And I would say that most of us are concentrated in terms of how we collect, right? We can't diversify and have everything. We can't have all the Star Wars, right? There's just too much out there. And for the most part, I would say most of us are probably concentrated either on loose graded or on certain subset of mint on cards or whatever it is that your niche is for your collectibles room, your collectibles investing. And having a more diversified portfolio of Star Wars collectibles is certainly less risky. But it's just something to think about, is that, I've veered too far off the path for extended periods of time to where I do have a sort of a mishmash now of bootlegs and loose graded and mint on cards and, character runs and, whatever else it is. So it's just something to think about. Do I want to stay concentrated this year? Or do I have such a wide range of wants for my collection holes right now that I got to be flexible? The more flexible you can be, the more diversified strategy you can take, the more likely you are to not overpay. It's when you get concentrated on one certain segment, you get that tunnel vision. And tunnel vision typically leads to overpaying. I know that's been true for me. So that's just something to think about, is that can I stay flexible as to what I'm willing to spend my money on in 2025 versus I have to have an AFA 85 tri-logo IG88. That's the only thing I've got to have. Well, if that's what you only got to have, and the population report is 7 or whatever the number is, you're going to have to overpay for it to make sure you get it. But if you're willing to say, maybe I don't need a tri-logo IG88. I'm pretty okay with a 41 back or a 48 back or a 47 back, whatever. But just a carded mint on card IG88. You're going to have a lot more success. So, and not overpay for it. So that's the reason I put this slide up there. And diversifying, it does mitigate risk a little bit. And I'm going to only say this one time, but I have said this in the past, so I apologize for repeating myself. If the vast majority of your net worth is tied up in collectibles, that's a bad sign. Okay. Don't put all your eggs in one basket, because at some point the merry-go-round is going to go away and the vintage toy market is going to see a drop, in my opinion. The next generation of collectors is not there. They don't care. My kids' generation could care less about collecting. And I think that as they age and as they get money and as we age towards worm food and dying, there's going to be a time, another inflection point, where we're going to start to see a really rapid drop off in prices and a really rapid increase in supply. And maybe that's why Jeff has decided to sell his collection now, before the market changes any worse, before market conditions get even more challenging. He's got many millions of dollars wrapped up in this collection. Does he want to wait for the Star Wars brand to have a rejuvenation and have another leg up in prices, which I think could still happen? Or does he just sell it off now and take that money and diversify it into whatever else he's going to spend that money on? So it's just something to think about, that if you are heavily invested in this stuff and you don't have stocks or you don't have another portfolio of assets, you're taking a lot of risk with your net worth. So just something to think about. Just have a strategic plan in place. And I feel like when I usually stick to my plan or my want list for the year, I usually do okay. All right. And I have to sometimes you got to let them go though. Sometimes I had several items on my list for 2024 that it just didn't work out. It just didn't work out. I couldn't make it work at the time. Either I didn't have the funds or the price went too high, and I couldn't justify it. So by having a plan in place, it really will keep you from doing this, and that's chasing an item, overpaying for an item, and overbidding on stuff, because there's going to be a temptation to do that. And again, I think that if you really keep these tenets in place, I'm not really recreating the wheel here. This is all pretty obvious stuff, but I do like to mention this kind of thing every so often. But given everything that we have going on in this year, just with Hakes alone, God only knows what we're going to see on eBay. Think about what we've seen on eBay over the last year. We've seen incredible items from just one seller on eBay, CIB AFA. They have had dozens upon dozens of incredible tri-logos in very high grade that you never ever see for sale at auction. And that's just from one seller on eBay. Think about all of the incredible items that we've seen in my price guides over the course of the year that were just on eBay. So I know a lot of you are saving up for the Hakes auction, and don't be disappointed if you lose out to these whales, okay? I think that AFA 90 Yoda that we saw that sold for such an incredible price, there's going to be a lot of that. And I'm not trying to discourage anyone as it relates to these auctions that are coming up, because there are going to be opportunities. There's going to be stuff that gets overlooked. We talk about that strategy a lot too, right? Is to keep an eye on what is out there. And if you see something that's maybe lower tier on your want list, or you would like to have list, and the price is 40% below what you think it's really worth, maybe it's worth going after that versus paying 120% of an item that over fair market value for an item that you really want. And having that flexibility, being willing to let things go, I think could really play into doing well in some of these incredible auctions that are coming up. So it's just food for thought. I don't know why I wanted to make this video. I just felt like there's a lot going on, not only with the broader economy, and a lot of that will trickle down into how the collectible space does this year. I think inflation is going to play a major role in terms of how this year goes for the Star Wars collecting market. I think in general, we can probably write off new content as having any sort of effect on especially the vintage collectible space, because it just hasn't. It just hasn't had an effect that I can see. If it has had an effect, it's been a negative effect, in my opinion. But I think in general, I haven't really seen a direct correlation between really good Disney Plus content and really high collectibles prices lately. There just hasn't been much. So anyway, I hope you found this video interesting and thoughtful. Please leave me a like and comment below with what you think about it as it relates to your own collection. Thank you as always for watching, and I'll be back soon.